few days ago, I was having a conversation on Twitter with Nate and Eric, and we were talking about the idea of hyper-personalized portfolios. And I think it went something akin to crypto ETFs might be the death knell of mutual funds, because younger investors don't want to be in mutual funds with their fees, and they'd rather be in ETFs. And of course, younger investors, we think, want to be more into crypto and investments like that. And I said, I think between blockchain technology and AI is going to usher in this idea of hyper-personalized portfolios and the ability to have portfolios that totally match you, that basically no one else is going to have that portfolio. And they kind of said that might be years off, or it might never happen, but I just wanted to explain what they were. I'm not going to make an argument that they're going to happen anytime soon, although I said they will happen soon or in a few years, and I believe there's a stake bet involved. But I wanted to talk a little bit about what I meant and why I think they might happen sooner rather than later. So let's talk about what I meant by hyper-personalized portfolios, including AI and blockchain technology. So what I mean by this is, right now we have, we'll say a blockchain, and I'll go ahead and call it Ethereum. It could be any one of smart contract chains. And keep in mind, what this is essentially is a database, but it's a database that's not owned or run by any particular person or government or entity, company, anything like that. This is a public database where the validators, those that are validating the network, are basically keeping the database going forward. And when they use Ethereum, use ETH, the token, they are basically buying space on that chain. They're paying for space on that chain. But what they're doing is securing that database to keep it moving forward, to keep it rolling forward. So that's just a little bit about that. Ethereum is just basically a decentralized database. A database is not owned by any one person, entity, government, anything like that. And it's incredibly transparent. All the data that's on this chain or in this database is viewable up to the second anytime you want. So now assume that, first we'll assume that maybe public stocks, so public equities, public debt, public credit, whatever you might want, whatever you think about like that, might eventually be denoted on a public blockchain or stored on a public blockchain. And you might go, Adam, you're crazy. They're all stored at NASDAQ or New York Stock Exchange. We use DTCC to keep track of who has what. But keep in mind, the London Stock Exchange right now is doing trials where they are utilizing blockchains to be able to track all the assets, to track the stocks on the London Stock Exchange. It is a more efficient system. It's a more transparent system. It's probably a system we're going to go to eventually. NASDAQ has looked at it already. New York Stock Exchange has looked at it already. So it's not going to be that far off, in my opinion. Step two is, what about more kind of private investments? We talk about tokenized assets. So this is something that BlackRock, Larry Fink has talked about, the idea of tokenizing equities, tokenizing stocks, tokenizing maybe private investments. And all tokenizing investments means is, okay, first I said, maybe public stocks. You might have something like Apple and Amazon. And since this is very transparent, what you might have is, instead of Apple and Amazon having to constantly update all their numbers, you might have up to the second information in terms of how Apple and Amazon are doing in terms of their financials. Now, I don't know if they will make all their books public. I don't know if they'll put all their books on chain, but you will have the ability to trade those on chain. And I don't mean trade them in a degen sort of way. I mean, they'll just be denoted on a public blockchain like Ethereum or like one of the other, public blockchains. So you have publicly traded stocks. Now we go to tokenizing assets. So BlackRock has already talked about this. What this means is, let's say you take something like a private real estate deal or a real estate investment company that raises money via a Reg D offering, only open to accredited investors. You have a real estate investment trust. Let's say BlackRock does this, which they have already said they are likely going to do. This is something, tokenizing assets or tokenizing investments like this will allow them to be more efficient in terms of how they manage and how they track assets. And for now, you're just going to have to trust me on that. But the likes of BlackRock, Boston Consulting Group, JP Morgan, Citigroup, all of these, Bank of America have all come out with reports saying it will be anywhere from 16 to $35 trillion worth of assets will be tokenized between now and the year 2030. Okay, that's only 6.5 years away, not that far away. So that part is not that far-fetched. The public assets, not that far-fetched. What do I mean by tokenized assets or tokenized assets or tokenized investments? Let's say a guy, I don't know, we'll call him Phil Back, who happens to, talk about real estate funds, decides to start a real estate fund, which I'm going to call Refund because it's fun for me. He starts a real estate fund. And in this fund, he goes and, gets accredited investors to buy in. Maybe he offers it completely publicly. Maybe he registers to that. But let's just say it's open to accredited investors only. And he goes and, with this fund, they're going to go buy 25 different real estate properties. And all those real estate properties have a ton of data. And all that data is where they are, how much they pay in taxes, what their appraisals are, what they're getting in terms of rent, what the occupancy is. All of those sorts of data is going in there. And maybe that data gets put on a public blockchain. There's a company called Invinium that is already doing this. This is already getting data for these private companies and making it available on public blockchains. And they're not making it available so that you and I can go snoop in it and everything. They're making it available so it is more transparent, so it's more easily transferred, so that I can see the value of the assets. Okay, now, Phil Back starts this company called Refund, and what he does is, instead of issuing shares, physical paper shares of stock or shares of stock that are held at some sort of custodian or some sort of transfer agent, instead he issues a token, and we'll call it the Back token. And he issues 1 million Back tokens, each representing one share of this particular fund. So let's say that I want to buy 1,000 Back tokens. I can hold them, and because they're denoted on a blockchain, I can hold them. I don't have to hold them with a custodian like Schwab or Fidelity. I can hold them in my own wallet. Now, remember, these Back tokens, the data for them in terms of rents and everything else is available on this public blockchain. Therefore, anyone can see what the value of this, and anyone can derive their own value of the Back tokens based on looking at that data, and maybe based on looking at the cities that they're in, based on looking at the occupancy, when the loans are coming due, how much they have in debt, all of those things, they can derive their value of the Back tokens. It's no longer something that is only available to the management of the company or only available to the investors. It's now, it's now data that might be available. So I can derive my own value from it. Now, let's say that a company, I don't know, we'll call them BlackRock, and believe me, I'm getting somewhere with this. A company called BlackRock issues some sort of fund related to oil and gas, and they issue a token because they've already said they're going to tokenize things, and they call that token OG, right? Oil and gas. And that might be, available publicly. Now, let's talk about me. I'm the investor. My name's Adam. Let's say I happen to live in Texas. I happen to work for an oil company. So now my income is very tied to the oil industry. The value of my home, the value of my community, all of those things are very tied to the oil industry. So does it make sense for me to own the OG token? It probably doesn't. So this is where we're going to have hyper-personalized portfolios, because between hopefully a financial advisor, but also AI, also robo-code, all of those things are going to be able to look at my situation and go, look, if there is a severe drop in the price of oil, something like it goes from $100 a barrel to $25 a barrel, Adam's income might be impacted. The value of Adam's home might be impacted. Some other things in Adam's life might be impacted. It doesn't make sense for Adam to also have his portfolio impacted. Therefore, we're not going to put OG into Adam's portfolio. But because Adam is so heavily tied to a commodity, we're going to put something like tech in Adam's portfolio. Maybe we're going to put real estate in Adam's portfolio, something like that. That's kind of the hyper-personalized portfolio, and it's going to be very AI-based. Now, remember, because these might be trading, these might exist on a public blockchain, because the data and these tokens are going to exist on a public blockchain, and because they're movable and tradable very easily, it's going to be very easy for an AI-based program to look over my portfolio, to look at all the data, to look at all the risk available, and to go, look, maybe this refund, this real estate fund, this token, at this point maybe has too much exposure to Texas, and Adam lives in Texas, and Adam certainly doesn't want the oil industry to go down, have the value of his income, the value of his portfolio, the value of this token all go down at the same time because everything was happening in Texas. We're going to have to go find another real estate fund to invest in that doesn't have so much exposure to Texas. And that is the idea of hyper-personalized portfolios. And if you think we're that far off, think about years ago, we didn't have robo-advisors that could rebalance automatically. So couple robo-advisors with AI, the ability to look at data on-chain, the ability to effect transfers on-chain without necessarily having to go through a custodian, to look at my wallet, but also use AI to look at my life, where I live, how I make my money, maybe look at the stock, maybe look at the company that I work for and see what's happening there and go, based on Adam's risk profile, maybe there's too much exposure to the same types of risk in other parts of his portfolio. So we're going to balance that out. We're going to diversify Adam's income with his assets, with his home, with everything else, such that Adam has a more balanced financial life. And that's what I think is going to be the hyper-personalized portfolio. It's not going to be all about who gets the best return. It's going to be about who gets the best return for their lifestyle. And that's what financial advisors have been trying to do for a while, and that's what ETFs are trying to do. And that's what robo-advisors have kind of been trying to do. But the combination of AI plus the transparency, transferability of everything on-chain is likely going to give us that ability. And if you think we're that far off, remember, BlackRock and others say we're going to tokenize assets. Companies are already putting data on-chain for these tokenized assets. London Stock Exchange is already experimenting. NASDAQ is already experimenting with stocks being on-chain. We've already had robo-advisors for a while. We're all using AI and figuring out how to use it. We are not as far off as you think we are. So this is what I wanted to explain in terms of hyper-personalized portfolios and where I think they're going. I might be completely wrong about this, but this is reading into the evolution of the technology and knowing that we usually evolve forward, not backwards, and thinking that even though we might dig our heels in and go, the government won't allow this, or Fidelity and Schwab won't allow this, or whatever it might be, the market has a funny way of continuing to push forward and giving people what they want. And when large companies like BlackRock, the largest asset manager in the world, jump in, when eventually, probably companies like Fidelity jump in, we're likely going to see the ability for hyper-personalized portfolios.